Hello everyone, and welcome to Channel 41. I'm Jaylen Brooks, and I'm your stock analyst for today. We'll be diving deep into Meta Platforms Incorporated, ticker symbol Meta. So, looking at the data from Yahoo Finance, the current price sits at $613.57, a bit off from its 52-week high of $629.79. Interestingly, the price-to-earnings ratio is at 28.93, which tells us something about market expectations. Now, from FinViz, we see a forward price-to-earnings of 24.2, suggesting a potential growth in earnings. The company's also been active with share repurchases, which can be a good or bad sign, frankly. Okay, so Emma, what are your initial thoughts on Meta's current valuation, given these metrics?
Current valuation of Meta, as reflected by its price-to-earnings ratio of 28.93 and forward PE of 24.2, indicates a relatively high market expectation for future growth. This is corroborated by the strong revenue growth of 22% reported in the SEC filing, which suggests robust demand in its core family of apps segment. However, the Reality Labs segment remains a concern due to its ongoing losses, which could weigh on future profitability. The share repurchase activity might signal confidence in the company's prospects, but it also reduces cash flexibility. The dividend yield is minimal at 0.0032%, which might not be attractive for income-focused investors. On the technical side, with the current price close to its 52-week high, it indicates potential resistance levels unless new catalysts emerge. Given the mixed signals from financial metrics and ongoing investments, I would recommend a hold position, allowing for further observation of how strategic investments, particularly in AI, play out over the next few quarters.
Emma, I appreciate your balanced perspective. Let's dissect this a bit further, shall we? The 22% revenue growth is indeed impressive, as highlighted in the Securities and Exchange Commission report, but we need to consider the sustainability of such growth. The Reality Labs segment, while still in the red, shows a reduced percentage loss, so that's a silver lining, I suppose. And regarding the share repurchases, I see it as a calculated risk. It can boost earnings per share, but it also ties up capital. The FinViz data shows a healthy cash per share of $27.46, so they have some room to maneuver. The substantial increase in research and development expenses, up 21% year-over-year according to the Securities and Exchange Commission filing, is a critical factor. It's a bet on the future, particularly in artificial intelligence, as indicated by multiple news reports regarding their Llama model and data center investments. This aggressive investment in artificial intelligence could be a game changer, but it also adds to the uncertainty. The debt level, as pointed out by Emma, needs careful monitoring. It's risen significantly, which could impact their financial flexibility down the line.
The points you bring up are crucial for understanding Meta's broader strategic positioning. The company's substantial investment in research and development, particularly in artificial intelligence, is indeed a double-edged sword. On one hand, it positions Meta at the forefront of innovation, potentially unlocking new revenue streams, especially with the Llama model and the new AI data center initiatives. These investments could enhance their competitive advantage if executed well. On the other hand, the increased debt level, as you mentioned, does pose a risk to their financial flexibility. It is essential to balance these investments with prudent financial management to avoid over-leverage. The cash per share of $27.46 provides a buffer, but it is not infinite. The reduced percentage loss in Reality Labs is encouraging, yet the segment remains a drag on overall profitability. While the share repurchases might enhance earnings per share in the short term, they must be weighed against alternative uses of capital that could drive growth. Monitoring these dynamics will be key in assessing Meta's long-term trajectory.
Exactly, Emma. It's a balancing act. Meta is betting big on the future, and the success of these bets will determine its long-term value. My price target for Meta in the next 3 months is $630. In 6 months, I predict it'll reach $650, and in 12 months, I'm projecting $700. Now, given the current market conditions and Meta's aggressive investment strategy, my recommendation is a cautious buy. The potential for growth is there, driven by artificial intelligence and the core business. But the risks, particularly the debt level and the Reality Labs performance, cannot be ignored. So, due diligence is paramount. And to our viewers, thank you for tuning in to Channel 41. Don't forget to like and subscribe for more insightful stock analysis. We'll see you next time.